I just want to highlight some of the recent moves we've seen in the sector and round up with our view of the sector overall investment case review. We have seen a sharp sell-off in the sector over the past 2 months. Sector has declined by about 20%. I think it's important to note that the sell-off was largely concentrated in a group of related companies. Excluding those companies, you'll actually see that the rest of the counters have performed quite well year to date. In fact, some of the counters are positive. We have seen a shift in exposure from mostly offshore exposed companies to locally exposed companies, with a view to basically capture some of the positive sentiment that we've seen growing locally. In fact, as a house, we have upgraded our GDP growth numbers for FY18 and 19 slightly higher, as well as reduce some of our inflation expectation lower. All of this should lead to some improvement in consumption. What we're hoping to see is that all of these factors will lead to an improvement in local property fundamentals. We should see in the medium term an improvement in rental growth, some absorption of vacancy factor that we've been seeing in some of our shopping centers. Overall, the sector is trading on a forward yield of about 8%. We are still expecting distributions to grow by between 7 to 8%. This is underpinned by escalations, good escalations which we are still experiencing, as well as an improvement in reversions. Taking into account that we expect local bond yields to be anchored around current levels, we do expect the sector to deliver decent returns in the short to medium term.